Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. It's Fed Day. That's all going to take place at 2 p.m. with the press conference to follow. Focus will be on the dot plot. The focus will be on the central tendencies. And Adam thinks the focus should be on what the Fed chair says. How willing is he to cut rates if the economy does start to deteriorate? And how quickly will he do that, or is interested in doing that? So that's going to be focus in trading at 2:30, and we'll see how things go. But in the meantime, I'm going to take a look at the technicals for the dollar versus Canada. So let's get started. We are seeing the dollar versus Canada move to the upside here of late, and in the process on the daily chart, we've moved above the 100-day moving average and the 200-day moving average in the month of March, and that is a more bullish bias here. We are moving toward the 61.8% retracement of the move down from this high to this low right here. I guess that's the 2023 high price, or close to it. Yes, it is. 2023 high to the low price that we saw at the end of 2023. 61.8 comes in 1.3623. Let's take a closer look at the 4-hour chart, actually, to see what has happened since this high price to this low price, and more recently over the last 10 or so weeks. And you can see that there is a slight bias to the upside with higher highs and higher lows along the way, but the volatility is up and down, up and down, up and down. We do have this swing area right here, which we approached yesterday and actually moved into right here. And in trading here today, we've came up to the low of that swing area near 1.36049 and found willing sellers against the level. This time, the swing level goes all the way back to these areas right through here, where we had different swing highs and swing lows, forming the support and resistance level. This is an area where the price doesn't trade a lot, and it has either reflection or deflection against it. In trading here, we started to use that level as resistance, 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 until the price moved to the downside. It wasn't until these weeks, about 3 or 4 weeks ago, where the price came back up to the low of that swing area and found willing sellers. And in trading yesterday, as mentioned, the price moved up into this yellow area and found resistance sellers again, pushing to the downside and back up in trading here today before pushing back down again. So needless to say, through the FOMC rate decision, if the price is able to get above the 136.049 to 136.269, that would be more bullish for this pair. It would also get the price above that 61.8% retracement level outlined off the daily chart. That low comes in at 136.23. On the downside, if the Fed is more dovish, or the market interprets it that way, that the Fed chair is more willing to cut earlier rather than later, we could see a rotation back toward the 50%, in which case we'll look down then toward the 100-day moving average and the 200-day moving average, along with the other cluster of 4-hour moving averages through here. This 200-hour moving average is this green line right through here, and the blue line represents the 100 bar moving average on the 4-hour chart. So all those levels would be in jeopardy of being broken, and if we break below those levels, that would increase the bearish bias. So right now we are in between resistance above up to 1.3626 type area, and above the support between initial support between 1.3518 and 1.35378. That's my look at the dollar versus Canada. My name is Greg McCloskey. Good fortune with your trading. Bye bye now.